Well, welcome back, everyone. What an exciting day in markets we've had. It has been an uptrending market for the majority of the day from the pre-market lows. Let's go take a quick look at how the market has played out and focus in particularly on the 1 hour chart. I'm on my wealth charts layout right now with the member exclusive indicators. We had a great class over the weekend breaking down every piece of this amazing toolkit. And of course, we started to analyze what the likelier outcomes would be, identifying a higher probability to start the week with a minor pullback, a little bounce up, and we've seen that so far. Now, the back half of the week is busy, but let's talk about today. If you focus in on the hourly chart, into the end of last week, we made a high, got a negative momentum shift. Sunday night futures started to trade down. We moved into a champion cross sell zone. You can see the red bar at the bottom, and you can see the slow spike moving down and being below the bottom of its channel. The downtrend persisted, easy to identify with the visual downtrend channel, followed by negative signals that were added to price on the journey down, like the range breaker, like the wealth signal short, and of course, like the breakout forecaster breaking us down. We saw a potential positive divergence form in the overnight session, and of course, we did end up seeing the price action of the market bounce back into the champion cross sell zone, but the biggest or widest amplitude of the zone was in the rear view mirror. And at the same time that was happening, the 4 hour chart slow spike hit below the bottom of its channel and started to tell us it wanted to start moving up. So if you think about the subchart indicator as a gas gauge, the 4 hour chart effectively started using a full tank of bullish fuel right in and around here, so the 10 a.m. bar. And if you look at the 1 hour chart, it started using a full tank of gas, that is bullish gas, right in and around that 8 a.m. to 6 a.m. period. Now, prices moved up through the visual trend channel, had a little stifle, and into the open of trade today in the active trader room in front of members live. I took in a real money account a trade long on a NASDAQ ETF. It was on the Canadian side, HQU, a double levered long on the NASDAQ, and that trade actually happened between 10 a.m. and about 10:50 a.m. Eastern time. So let's take a look at what the signal structure told us for that trade. Very clearly, we were seeing price action on the 10 a.m. bar give us a break above the top of the negative spaces here, which are visual downtrend channel, the champion trend down zone, and of course we had already come up above the champion cross sell zone. Now, intra-bar, if I take you back on a 5-minute chart, which we can just rip right back to earlier this morning, you'll get a fairly good sense on that 5-minute chart that we were starting something more bullish for that hour in particular. We'd already risen, but another part of the move was starting. Now, if you take a look at the beginning of the day on the 5-minute chart, you can see that we've got signals starting off the move. As we move into the 10 a.m. area, you can see that we had a pause in the market. But as that pause ended up testing the upward sloping visual trend channel, we then started to see long side signals appear. And it was just shortly after 10 a.m. where I took my long side trade in front of members, and we then saw in the candles following negative momentum shifts that were broken, and of course, positive momentum shifts, all with price coming right into the champion cross buy zone and pushing right back above. Now, you've heard Rob talk about this through the summit and through his videos, where if we are seeing price dip down into the champion cross buy zone and cross back above, that cross does support a potential long side entry. That's what I was doing. And rode that move all the way until about the end of the hour. Now, we did come into the end of the hour and the next hour with a little bit of a negative divergence. The divergence tracker and those red lines helped identify that. So if we take all of the space of the sideways action that happened right over here, many traders would look at this and go, this is a time for things to turn down. Well, when we were looking at this in the active trader room, we were looking at this as objectively as we could with the powerful tools, and I was looking for another trade opportunity. Now, I avoided doing it really at this time being the back end of the 11 a.m. hour. However, I was looking for a push up in the market and was looking to catch that push up. I missed my entry, and what I then did was come in and try to take a trade when we saw price action moving sideways. Nonetheless, we were at a higher point, and that's around the 1 p.m. bar, which you can see right over here on the hourly chart continue to rise. We still had the stability from the hourly chart signal to support a rise in price, and boy did it ever into the close. However, we did see a period of time right in and around here after the initial push up. The market wasn't very strong. It went sideways. And I tried to force a long side trade without having the best setup. So if you take a look at this time frame over here and you take a look at the spike tool at the bottom of the screen, the slow spike remained above the top of the channel, which is bullish. However, the fast spike started a journey down, letting me know objectively that I have to be careful with this trade. It wasn't the highest probability one. Now, you may have heard Rob in his excellent over the weekend video, the good and the bad of the trading back on Friday that he did, which did end up in positive territory for him, as he said. But could it have been better? Well, could I have waited and been more patient and waited for a signal that looks like a green dot and the spike getting back up above, at minimum, the center of the channel, if not above the top of the channel, to look for that better or higher probability entry? That would have been a better trading decision. So in the morning, the trade that I took grossed about $250. In the afternoon, the first trade that I took didn't go very well. I ended up losing some money, around $50. However, I did come back in the afternoon in front of members and grossed enough to get me up to a positive $187 and change, and rode the next move up where the signal structure was more positive. And that would mean on a 1 minute chart, 5 minute chart, we've got alignment. And of course, we've got the spike tool rising up above the top of the channel. Nonetheless, the entirety of the day was backed by the 4-hour chart being in a positive state and the 1-hour chart using that high octane bullish fuel indicated by that slow spike above the top of the channel. So a great trading day today overall. Looking forward to seeing you in videos just like these. The back half of this week is going to be busy. Take great care out there. And remember, when thinking about decision making in markets, the risk has to be seen first before the reward. Higher probability setups do not always work. But again, a higher probability setup tends to do better for me in my trading rather than trying to force a trade. Could it have been better? And could I have avoided the small loss ahead of the next move? The answer is yes. And patience and being prudent is the key. Wishing you a wonderful rest of your day. Take great care in the markets. It is a market week with plenty of landmines in the back half of the week. So a good time to take great care and focus on risk management. Have a wonderful rest of your day, and thanks for watching.